analysts at Vertiva Capital say headwinds like naira devaluation, higher operating expense, inflation and FX losses, among others, impacted the profitability of companies in the consumer goods space. Oluebube Nwosu, consumer goods analyst at Vertiva Capital, joins me for this discussion. Thank you so much. It's a pleasure to have you on the show today.
Pleasure to be here.
I'm just looking at the companies under your coverage, and of course I've had conversations with other analysts looking at looking at how the companies performed. But just looking at the companies under your coverage, what would you say is sort of the overriding theme or common denominator from the numbers from one company to the other?
All right, thank you very much for having me. So we've seen a common theme across major companies in the consumer goods space, and first one is price increases. So we're seeing the major product lines having a consistent increase in prices so as to keep up with inflation. We've also seen introduction of more cost-cutting measures for the operating expenses to, upturn the issues of inflation boosting their cost. But we've seen not a lot of success with that when it comes to their cost of sales, because there's not a lot of cost controlling you can do with that. So more of the cost controlling measures are kept with the operating expenses. But the big elephant in the room really has been the FX-induced losses. And this is because they have to import a number of their commodities for their raw materials. They also have to, they have quite a number of expenses that are dollar denominated. They also have, some of them also have loans that are dollar denominated. So when we saw the naira move from about 140 or thereabouts to over 700, then it just means that the accountant at the firm has to just begin to recalculate a lot of things.
But now we're somewhere around, what's 800 to 800
exactly.
plus?
So it just means that they're going to keep having those losses, right, till the end of the year. And that's been the overriding theme for...
So how do they recalibrate, going forward into the new year? I know that, because I'm looking at FX losses for flour mills, Nestle, Nigerian breweries, international breweries, Guinness, Nigeria. What do they go from there? We know that a backlog is being cleared, but we know that is for, of course, the forwards. That's a different story entirely. But going forward, there's also the question of, okay, where's the liquidity going to come from? At what time are we going to be able, where's the naira going to be? How do we, most importantly, where I'm going, how do we even plan for these companies?
And really, that's been where the biggest challenge has been, being able to make good forecasts for those different firms. Because if you have to depend on the dollar for a lot of your production, then you want to be able to forecast the dollar. Given that difficulty, we're now seeing them rethinking some of their supply chains. People are now looking for more local suppliers for some of their products.
Inputs, local, some kind of backward integration for local inputs.
That's happening, but it will still need to happen at a lot faster pace. So, replace a lot of the, materials coming in from abroad. And there also has to be, there's still going to be dependence on ensuring that backlogs are cleared. That is just one thing that cannot be taken out completely. Also look at the possibilities of some of them thinking about recapitalization so as to, deal with this in the interim. Because we're having very significant balance sheet debts as well as balance sheet payables. Somehow you have to be able to raise enough assets to cover up for all of those. Some of these firms are having over 300 billion in payables. Is
that going to be a problem 1, 2, 3 quarters from now for this? Because I feel like I feel that this might be snowballing.
It's snowballing already. So in the past couple of weeks, we've heard of some foreign partners refusing to honor letters of credits, which are basically how most of them import their raw materials, and they're asking for cash dollar. And if you're asking for cash dollar for people who import in terms of hundreds of billions of naira, that's a lot of dollar outlay that's needed, right? So it's an issue. And one of the firms that's a multinational, they have to basically restructure their intercompany loan in their parent's company.
Because I'm looking at a company like Nestle, and then Nestle could they have some kind of a lifeline from the
That's
parent
what
company?
That's what they're currently hoping on. That's what they're currently doing. I think they're actually the ones that are restructuring their intercompany loan just to have a longer time frame for paying it back. So it's not like these firms cannot make money. They do make money. Their top lines are pretty decent, given it's been a tough year for them, from the cash crunch, the inflationary environment, all of those things. Yet, all of them have posted top-line gains this year. But the biggest issue have now been when they go beyond the top line, what is really happening below is where their major challenges have been. So they'll have to start thinking about restructuring in terms of their debt obligations, or how they source their inputs, basically just recapitalizing their firms.
And on the another part of the story is inflation and how it's hit customers' pockets.
Yeah.
You talked about price increases earlier, but the question is to what extent? The forecast is for inflation to continue to increase.
Yeah. So at this point, many consumer goods companies are having to make do with the trade-offs of higher prices means lower volumes. For a while, we saw we saw them not try to raise prices pretty significantly so as to keep up with volumes. But since last year and then by this year it became accelerated, they just had to do with the fact that they have to miss some volumes, but they have to increase prices to keep up with inflation. So all of the top line gains, in fact, have primarily been driven by price increases this year. Especially among the breweries players, they've seen significant volume drops because people are looking for cheaper alternatives and they cannot sustain their normal consumption of...
Well, I imagine there would be. Right. We're going to have to leave it there, Oluebube, but thank you so much for talking to us today. Great insight on the sector.
Thank you for having me.
Oluebube Nwosu, consumer goods analyst at Vertiva Capital.